Welcome back for another update on my high dividend, small account margin strategy. The market had a tough week. Stay tuned and I'll go over my account status update with you as I try to turn $1,000 of Robinhood's money into $1,000 of my money. Nothing I say today is financial, investing, or any other type of advice. You need to do your own due diligence for your investments. Let's get started. My account ended the week at about $2,034, only down 0.33%, which is really solid compared to the market as a whole. But this really just reflects the stability of PAAA. This fund represents the vast majority of my account, and I purchased it for stability. You can see for the week it was actually up about 0.33%, and it's been doing exactly what I need it to do, holding steady even in rocky times, and helping keep my account value over the $2,000 margin minimum. If we take a look at my buying power, you see I've got about $35 available. Around $17 of that figure represents my Robinhood Gold subscription refund when I changed the payment method. Another 19 of that are dividends that I haven't reinvested and currently don't have a home for. And there's $1.89 in pending orders. My margin status is high risk, only 1.17% above the maintenance threshold. Here's a chart comparing price return of my high yield ETFs and the S&P 500 over the past 5 days. The S&P 500 was down about 3%, NIVI was down almost 7%, Blocks down about 3.5%, Chippy down about 2%, SPY down about 3.5%. The price of Blocks is heavily influenced by Bitcoin and the cryptocurrency world, and as you can see, it had a rocky week. Let's check total return. And things look a little better when you add in the dividend yield. NIVI down about 5.5%, Blocks down about 2.75%, Chippy down about 1.32%, and SPY down about 2.5%. It's interesting to see this huge uptick Blocks had at the end of the week, which really helped save it. Now we turn our attention to dividends. NVYY paid out $3.48, or 30 cents per share, which equates to about a 99% annualized yield. I split the dividend in half. $1.74 was invested into SPY, and I'm still holding the other half, along with a bunch of past week's dividends, till I figure out what I want to do with this fund. I'm pretty sure I'm not going to keep it, and so far I've just been kind of riding out the stock market. I have about $19 in dividends that I haven't reinvested from NVYY. This is hurting me with my $2,000 margin threshold. Because I haven't reinvested these dividends, the margin loan has gone down. However, since these dividends aren't invested in anything, my account value is artificially low. In other words, it would be a little bit higher than the $2,034 we looked at earlier if these $19 had been invested into something. BLOX paid me an even 10 cents per share, so I got 88 cents this week. Splitting the dividend in half, I combined this week's 44 cents with the past couple of half dividends to be able to reinvest back into Blocks. All combined, I was able to invest $1.35 back into BLOX and bringing my share total up to almost 8.9. The cost per share you see here is really high because this current position is a result of the COIW and HOOW positions that I sold out of, and both of those ETFs did really poorly, resulting in the huge loss you see. Of course, this is only a share price return in this view, so it doesn't tell the whole picture. If we take a look at Chippy, it provided $1.08 this week at about 38.5 cents per share. You can see the 54 cents in red to be reinvested is still waiting another dividend so I can get over $1, since I can't make a purchase of less than $1. 38.5 cents per share is the lowest dividend amount I've received from Chippy, but it's only my 6th dividend. If we look at a chart of their dividends, you can see it's definitely heading down, but it's been lower than this before. Looking at the chart, it looks like maybe back in June, 35 cents was the lowest that it's been. But I'm not panicked, since the market itself is doing really bad. I also received my monthly SPY dividend at 51 cents per share, which represents about a 12% annualized yield. And once again, each SPY dividend is a little bit higher than the one before. I know these aren't large amounts, but I'm happy to see the dividend continuing to rise. The price per share went down, but that's very understandable considering the macroeconomic situation we're in. Heading over to total return, things are still ugly. My original 4 ultra high yield ETFs, now down to 3 ETFs, are down about 55%. Factor in the profit of SPY-I, and the account is down about 36%. Remember, I'm not including the value of PAAA in this calculation. If you made it this far, you may be wondering what exactly my plan is. I'll go over it for you real quick, but you can find out more about it in the first 5 videos in the series. The first thing I did was purchase my foundation fund, which I chose as PAAA. It's a stable fund that has a better yield than what you can typically get from a high-yield savings account or Treasury bill ETFs. The stability of this fund is critical to my plan because my small account is close to the minimum threshold of $2,000 for a margin loan. If my equity drops below $2,000, I could be subject to a margin call, and I've actually had that happen a couple of times, but through no fault of PAAA's. I've had to add a couple of shares to my position to avoid margin calls. A key aspect to this plan of turning $1,000 of Robinhood's money into $1,000 of my money is my Robinhood Gold subscription. One of the perks is a free $1,000 margin loan. I pay $50 a year for the Gold membership, but there are other benefits that can make that worth it to you. So I used $1,000 of interest-free margin to buy 4 ultra-high-yield ETFs for $250 each. Originally, they were MSTY, SNOY, COIW, and NVYY. Because of the poor performance, I sold MSTY and bought HOOW. And since then, I've sold HOOW, SNOY, and COIW. I replaced SNOY with CHPY, Chippy, and combined the HOOW and COIW positions into one new ETF, BLOX, or blocks. I'm taking half of the dividends and reinvesting them back into the funds. I'm taking the other half of the dividends and buying my forever fund, SPY-I, until it reaches a balance of $1,000. Then I'll use the dividends to pay off the margin balance. My hope is to keep SPY-I forever. It's a NAV-stable ETF with a solid 11 to 12% yield, and I'm hoping it's something I can keep for decades. So that's my infinite dividend plan. And if it works, I'll essentially be getting $1,000 of SPY-I for free. The primary obstacle I've encountered so far has been the poor share price return of my high-yield ETFs. My original ETFs, including MSTY, COIW, and HOOW, along with NVYY, pay out really high dividends. Originally, I was only scanning for ETFs that yielded at least 70%, and I was hoping for more, and a lot of these are in the 100% range. But what I found was the dividend came at a real cost. The net asset value, or NAV of the shares, eroded over time. So although they were paying me out a lot every week or every month, I was losing more in the share value, and this just wasn't sustainable. When I sold COIW, HOOW, and SNOW, I reinvested into lower yielding ETFs. They're still really high. Both of these are in the range of 35 to 45% annualized yield, but I'm hoping the lower yield will come with NAV stability. So let me know in the comments, do you think my plan is valid, or am I just wasting money? If you found this video helpful or entertaining, I'd really appreciate it if you liked and subscribed. It helps give me motivation to keep going. And remember, nothing I've said here is financial, investing, legal, tax, or any other kind of advice. I am not a financial professional. The information on this channel is for entertainment purposes only. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.